DMI, good to go. So good morning, everyone. My name is Virgil Prinsloo, and I'm joining you today from Sanlam Umbrella Solutions. Thanks so much for joining us this morning. I have with me my esteemed colleagues, Advocate Brett Ledouche and Advocate Yolanda Del Carme, and together we'll be presenting this year's annual Centralized Joint Forum. On behalf of all of us, we'd just like to welcome you to today's session. We certainly hope that you're going to find it valuable. If you're a first-time joiner or if this is your first Centralized Joint Forum, then welcome. We certainly hope you'll find the material and the information we'll provide today very, very useful. And if you're joining us again, if you joined us last year, you will recall last year we spoke about some industry updates. We spoke about a joint forum in terms of what a joint forum is, and we took you through the employee report. We also spoke about changes to our insurance policies, and we also spoke about member value-added benefits. So similar to that, we're going to get straight into today's agenda. We've got quite a lengthy one. We've got some subject matter experts with us. Please feel free to ask your questions or post your questions in the chat. We'll see how much time we've got at the end of the session. If, however, we don't get to all of your questions, as usual, we will be making this recording available. And we will also be answering the questions when we provide you with some feedback. So taking a look at today's agenda, we're going to be looking at legislative updates. Now, I know legislative updates is not always the most exciting thing to be speaking about, but it is something that we all need to take note of. There's a responsibility placed on all of us as the fund, as the administrator, as the employer. So what we want to do today is just make you aware of certain updates in the legislative environment. Hopefully after today's session, you'll have a better understanding. But if you do have any questions, you know, the aim today is just to create awareness and provide an overview of some of the requirements. If you still have any questions afterwards, you're welcome to refer them to your client relations manager or your contracted benefit consultant. So I think let's get straight into it. We're gonna touch on topics under legislative updates relating to customer due diligence, the FSCA conduct standard relating to contributions. We're going to be talking about policyholder protection rules, and Yolanda's going to take us through that. And then Brett will be chatting to us about the very important two-pot system that I'm sure is a buzzword around the retirement fund industry at the moment. Perhaps you've heard something about it, and Brett's going to explain to us what the proposed legislative changes are going to be. And then later on in the session, I'm going to take you through our healthcare integration under our member benefits section. Right, so customer due diligence. What exactly is customer due diligence? So it's a regulatory requirement in terms of the Financial Intelligence Center Amendment Act, or the FIC Amendment Act of 2017. And why did this come about? So this is in response to anti-money laundering, countering of financing of terrorism, and anti-bribery corruption, and anti-tax avoidance. So that's the purpose of the legislation to address those things in terms of money laundering, etc. And who is this applicable to? It is applicable to all Sanlam clients, and very important to consider. Sanlam reserves the right to cease. In fact, we are obliged to cease doing business with a customer if any of the obligations in terms of the Act and other party due diligence requirements are not met. So what does it all mean? What is customer due diligence, also referred to as party due diligence? Essentially, it is saying that Sanlam needs to know who we are in business with. So quite a relatively simple thing to understand. We just basically need to know who it is that we are in business with. So how do we go about finding out who it is or determining who it is that we are in business with? Number one, so we're going to ask you for a couple of things, or we need to obtain a certain amount of information from you, starting with your legal entity document. And that's going to be based on what sort of business you are, if it's an NPO, a private company, public company, a school, etc. And then we also need to understand who the beneficial owners or ultimate beneficial owners are of that business. So say, for example, you've got a number of directors and each one owns a share in the business. We may also request a shareholding certificate to understand who is the ultimate beneficial owner of that business for Sanlam to understand who exactly are we in business with. So other information we also will request are copies of IDs and passports. We will request confirmation of your source of income and source of wealth, and also countries traded with. So it's not a lot of requirements. It's not very hard to understand. And how do we plan on doing this? So as you know, on an annual basis, Sanlam distributes your annual revision statement. So this year, from our 2023 revision, you will start receiving communication on that for our Unity clients sometime around mid-December, and for our Sanlam Umbrella Fund clients around the end of Jan and middle of February. What we've done is we've included a regulatory requirements page within your revision statement. And this is basically what it looks like. So it will ask you to confirm that there'll be a link. And once you click in the link, this document will open. And it basically asks you to confirm the thing I mentioned on the previous slide. This information can be submitted to Sanlam using the email address as indicated below. It's SUS, Sanlam Umbrella Solutions Party Due Diligence, or SUSPDD at sanlam.co.za. If we've got any other questions, or if you've got questions in this regard, you're welcome to address it with your client relations manager, who I'm sure you have now come to know who calls on you. The next up is piece of legislation we want to look at is the FSCA conduct standard, that is standard 1 of 22, as it relates to contributions, contribution statements, and contribution reporting. So why does this piece of legislation exist? Essentially, it is to standardize the manner and the format of reporting by funds in respect of all contribution-related matters. The conduct standard can be summarized as indicated. So basically, it stipulates the minimum information that employers must provide in terms of Section 13A of the Act, applicable to administrators and retirement funds. Also, it obliges funds to report employees that contravene or do not comply with the Act. Also, it stipulates the rate of interest payable on late or unpaid contributions. So a lot of employees out there, you might be thinking, well, it doesn't seem to be anything new. You're quite right. It's not absolutely new legislation. It's just standardizing the way in which funds report this. And coupled with that, there are a couple of new requirements for employers, and that's what we'd like to make you aware of today. I think you should have received a communication from Sanlam Corporate earlier in this week. Just to mention, the effective date of this legislation is 19 Feb 2023. So if nothing else changes, we are hoping that this will be in play from 1 March, or we're anticipating that it will. And that is when these requirements then become due. So let's take a look at the new set of data requirements for the employer. Again, some of it you'll notice it's very familiar. So what we're looking at is the name of the employer, the address of the employer, where an employer has multiple pay points, the pay point which made the deduction. So sometimes perhaps that wasn't very clear in previously. However, if you are making use of our electronic contribution process, most of all of this information is really contained within the system. And whatever new requirements comes out of this piece of legislation will be built into our system. So again, if you are not making use of the Sanlam electronic monthly contribution process, speak to your contracted benefit consultant, speak to your client relations manager, let them come and tell you all about the wonderful system that we are using. I always like to highlight the benefits of using our electronic contribution system. Members' money is invested, or let me say between 95 and 98% of our clients' money is invested within 24 to 48 hours. And that is great, because the way the markets work, one doesn't know, we can't predict when the best market days are going to be. The aim is to get into the market as soon as possible. So if you through our systems, your money can be invested within 1 to 2 days rather than 10 working days, then that is great for members, and members can start reaping the rewards of earning market returns. What we also need to know is the contact person responsible at the employer or pay point dealing with inquiries relating to contribution statements. So that would typically be either your HR person or your payroll person, the person that generally deals with these type of inquiries, contribution related inquiries. All information provided must be accompanied by a declaration by the employer that all eligible employees are accurately reflected in the minimum information. So what that is saying is, if you've got a permanent employee, a permanent staff member, they must be a member of the fund, unless for some other reason you've got directors that have been specifically written out of the rules of the fund. All eligible permanent employees must be on the fund, and the legislation is actually now requiring you to make a declaration to say that you've got all your permanent employees on the monthly payroll. And then lastly, from the employer side, the identity of the person envisaged in the Act as requested by the employer, from the employer by the fund in terms of 13A. What that is actually saying in the letter makes it very clear that we've distributed to all our employees. We're basically asking you, who is the chief decision maker at the company, like the finance director, etc., is ultimately responsible for the payment of contributions. On the member information side, a lot of those things should look familiar to you. So we're basically asking for the member's full name, date of birth, SA ID number or passport number, residential address, that is something new, postal address, annual pensionable salary, income tax number, and then of course the member's contact details in terms of their contact telephone number and their email address. And dear Linda will be chatting to us more about that when she talks about policyholder protection rules as well. That's it from my side with regards to the FSCA conduct standard. Again, if you've got any questions in this regard, please feel free to take this up with your client solutions specialist, client relations manager. Post your questions in the chat and we'll try to get to them at the end of the session. If not, we will be providing that feedback post this session. I'm going to hand over to dear Linda.
Thank you very, very much, Virgil. And good morning, everybody. I'm very pleased to see there's 106 participants in this session. Isn't it amazing what electronics can do for us nowadays? I'm very pleased to be here at this joint forum, and I hope to share some words or some messages on the policyholder protection rules with you. I don't have control of the slides, so Virgil, you'll have to listen to make sure that I move on to the next slide as we go along. So as Virgil said, when we speak about legislation, you know, it's like a swear word. Most of us don't really like it. Some of us are intimidated by it. We don't understand it. And I mean, that's everybody. Even I can promise you, even lawyers and advocates sometimes don't understand legislation. So what is important, though, is that as you know, as stakeholders, we need to help each other understand and engage on these issues. So I'm just going to spend a few minutes talking to you about the policyholder protection rules. And I know this is a word that you are all familiar with and that you would have heard, you know, so often, because it's actually been around for almost 5 years now. So for short, we call it PPR, because it's just a mouthful to say policyholder protection rules. So I'm going to quickly go through what it really is. And if you already know, it's going to be just a reminder again. And I'm going to spend some time talking about how it actually protects you. And when I say protects you, we're talking about our employers, our clients, our policyholders, and ultimately our members. So again, like I mentioned, thank you for being at, it's great to be at this forum. And in this forum, we can see that Sanlam Umbrella Solutions is trying to empower members to live and retire with confidence, obviously. And that means there's a full package that is provided as an offering. So we get to hear all about our retirement savings, which what Virgil was referring to and what Brett's also going to be talking to you about later. But I'm going to focus on the group risk benefits, because remember, for an employee, the total benefits package is actually the retirement savings and the group risk benefits. So if you look at the picture on the right, if there's anything there that you are familiar with, then you are definitely in the right place, because that's what we provide. And we are talking today about our in-service risk benefits. Just like you and I are an employee of Sanlam or ABSA Life or any other company that we work for, we are provided with in-service risk benefits. And those benefits are the key benefits that we have when life happens, when our families, you know, when people people pass away, there's funeral, there's life insurance, there's disability, when we become impaired and we can't work anymore. And of course, critical illness or severe illness, words like cancer and heart disease. I'm sure we all know about these diseases. So this is where we come in. So moving on to the next slide, what we are trying to do today is to tell you a little bit about how these policy protection rules actually protect you as the employee, as the member, and everyone on this chat on this channel today is obviously part of that, because we are all stakeholders involved in trying to achieve these fair outcomes for members. So like I mentioned, the policyholder protection rules has been around for almost 5 years, but there's actually 21 rules that are focusing on achieving these fair outcomes for members. And today I'm going to speak to you only about 2 or 3 of them, the key ones that I think that, comes up regularly in our day-to-day work environments. And like I mentioned, it applies to all role players in the industry. So role players, I can mention role players as long as my arm, but let's talk about brokers, or intermediaries, if you prefer to call them that. Let's talk about client relationship managers, CRMs, contracted benefit consultants. As I mentioned, our employers and our members who are the end customers, really the members. Beneficiaries as well, because they are the people that actually benefit when members pass away. And then there are funds, and there are administrators, whether that's administrators of the retirement fund or whether that's administrators of risk benefits. So when we talk about policyholder protection rules, we are not just referring to our existing policies and clients that we have in existence, but also new clients, new policies. And then, of course, we also refer to changes in those policies, when there are changes, when there are amendments, when rate reviews happen and changes happen. So that's the whole process that we're talking about when we referring to policyholder protection. And how does it protect you? You'll see a couple of circles here that I've isolated. And let's start at the bottom there. Advice. As members, as policyholders, we receive advice from consultants, from brokers, and Sanlam is also involved in that process. So, are all the role players doing is everything going down properly? Is it fair? Are we sending out the right messages, and there's no prejudice to the clients? So how are we doing that? So the policyholder protection rules protects that. The rules protect the advice we give. Moving along up to the top there, we can see, there's quotes involved. Once you're interested in the business, there's a quote involved. How are we doing that? Then Sanlam accepts the business. And then how is that process working out? Then, of course, when the policy is, has now started or commenced, how do we communicate with you? How do we contact you? Do we have your contact details? How do we disclose key information that you require to make decisions about your benefits, And then, of course, there's changes. The circle on the top there, we can see changes and reviews, rate reviews. All of that happens during the life cycle of the policy. And that life cycle can be years. Often we are with the provider for 2 years, 3 years, sometimes 10, 20 years. So it's about that life cycle, and the policyholder protection rules protects throughout. What happens when a policy needs to be administered throughout the life cycle? What happens when there are claims? Claims, are we doing it? Are we doing it correctly? Are we doing it accurately? Are we repudiating claims for the wrong reasons? All of these are looked at. Also the complaints, how is that working out for everyone? We are monitored, ladies and gentlemen, by how we do this, by these policyholder protection rules. So moving on to the next slide, as I mentioned, Virgil, the whole process is about how do we interact and communicate before the policy starts, when the policy is active, and the ongoing relationship during the life of the policy. So key here is that when we provide a policy to the member, the end customer, so to speak, we do so in a policy or a policy summary, or it's an amendment, a review, or some change. I'm sure you all know that this must be provided within 31 days. That's one of the rules that we speak of when we talk about PPR. 31 days. And there's a lot of role players that needs to be involved in this process to get that to the end customer in 31 days, because we use and apply our relationships with our brokers and our intermediaries and the policyholder themselves to provide this to members. So with the required data that you provide us with, that role players provide us with, we then can send you things like member benefit statements for distribution. And we can do this via our digital portals, whether it's our broker, or we can do it directly through the policyholder. Now, this is important because that member benefit statement is only one of the key documents that we provide to you. But it becomes key because that is actually what the customer wants to know. Since when am I a member? How much am I going to get paid? Under what circumstances am I going to get paid? At what are the limitations? Are there any extra benefits or riders? And how old must I be? And what fits in and what doesn't? So member benefit statements are key. But in order to send that to you, we need your customer details, like Virgil mentioned. You spoke about contact details. And just to go on to the next slide, Virgil, I want to talk a little bit about how important it is that we rely on our role players, on our policyholders themselves, on our brokers and our distribution channels to disclose this to our members. We cannot post a single thing to a post box or make a phone call to 6,000 members. So we need our role players to come in and say, okay, this is how we're going to operate. This is how we're going to do it. And we're going to make sure that it's happening in 31 days. The other part of the other side of the coin, of course, is that you need to provide us with proof of that disclosure that was made by Sanlam and by all the role players. You need to actually acknowledge receipt. And I know that sounds like a pain, but it is a pain, in fact. And I think a lot of role players, they have had challenges around that. But the reason why we ask it is not because we want to give you extra admin. It's really because we are monitored for compliance by the regulator, by the regulatory authorities. And so if we ask you for proof, it's because if we don't have proof, then they see that we don't comply, and then we get wrapped with fines, or there are sort of compliance disciplinary procedures. And that can often mean at the end of the day that if we can prove that with our members have received key documentation, that there can be terminations, or even if you're not even a client yet, your policy can't even commence if we don't have the member data from you. So there's a couple of things. We want to protect you. The only way we can do it is to provide you with information to make decisions, but we need contact details. And then we also need our role players to provide us with the acknowledgement that this has happened. So moving on to the next slide, when we talk about, sorry, Virgil.
Sorry, I'm just going to pause on that slide for a moment, and thank you so much. I think this is a very, very important slide, and thank you for the way you've brought that the information across. I just want to point out to all our Sanlam Umbrella Fund and Unity Umbrella Fund clients, again, as part of our annual revision process this year, we will be including an acknowledgement of receipt section in the revision as well. So as Linda said, we actually require you to return that to us, and the email address will be provided in the revision letter as well. It's essentially suspppr@sanlam.co.za. So important that we get back that acknowledgement of receipt and distribution to members within 31 days prior to the effective date of your revision date, which will be either 1 March or 1 April. Thanks, dear Linda.
Thank you, Virgil. And we have similar processes in place where we will provide our stakeholders with pro formas or templates to say, please acknowledge receipt. It's basically a tick box so that we can have that back and we can provide that proof to the people and to the regulatory authorities that monitor us. So let's talk a little bit about that contact details that Virgil mentioned earlier. And we're talking here about data, and some people get confused when they hear about data. We're really just talking about your member details, like your name and your ID number, and if it's your spouse also involved in the benefit, then their details, email and mobile numbers. These things are so key that when the PPRs came about, the changes happened over the last couple of years. Initially it was only name and obviously ID number, dates of birth, but numbers and emails and mobile numbers, it changes often, so these need to be updated. And I mean, if as South Africans, we know people change their mobile and email numbers sometimes as often as they change their underwear. So, but yes, we do need this information, and if we don't have it, the regulatory authorities actually we have to report back monthly to them to say, this is how much we have. We now are 50%, 70%, 80%, 90% on a monthly basis. So it's quite intensive. Ladies and gentlemen, we do not need to worry that we are going to take this information and bombard you with marketing or some kind of abusive scam messages or anything to that effect. All of the information that we get from you, all the data that you provide us with, is to help you, and it is all definitely POPIA compliant. We are going to make sure that we keep it in a safe place. We only use it for the reasons we ask from you. We're not going to be marketing or doing anything like that. So you do not need to be afraid, and you can tell members and tell clients as well. Please, we actually just want this information so that we can provide you with the details that is required. We have frameworks in place, ladies and gentlemen, that, you know, as strategies and policies about how all of this will happen. So no one is going to abuse your details. So as an insurer, we must be able to access data as and when required. And when we don't, we are not just wrapped across the knuckles, but as Sanlam, we're a huge provider and a big role player in the industry. So I can tell you that the regulator would definitely want to use us as an example of this is what happens when insurers or, you know, don't provide the information that they need to. So it's not just us, it's all in the industry that has the same problem. So we need data, up-to-date, accurate, reliable data. Moving then to the next slide, which is the last thing I want to mention, is that with the contact details, as well as we spoke about, which to communicate with you so that we can disclose to you, we continue to rely on you. If we cannot confirm an inception date, for example, of a new policy until we have the data, this is what we've been told. For existing business, if we don't have a certain amount of data, then we're told to terminate. Everybody suffers when that happens because it means you don't have cover. People lose their jobs, you know, so we need that written confirmation. If as well, if you as a policyholder are not planning to provide us with the contact details, because that is how intensive it is. The compliance regulatory authorities actually want that information so that they can see that we've bent over backwards to try and accommodate, you know, the member by providing information. But if the policyholder themselves don't want to provide it, we need something from them that says these are the reasons. So just lastly now, before I close and before I hand over to Brett on the next slide, Virgil, why do we all need to care about this? Why do we all need to care about the legislation? I mean, legislation is only for the insurer, or it's only for the lawyer. And that's not true. It's for all of us because we're all part of this industry. And so we need to ensure collaboration with each other. We've just come out of an extensive COVID, 2 years of risk that, you know, took the world by storm, and we've evolved, ladies and gentlemen. So we need to meet the future needs you know, of our industry and try to solve challenges now on a renewed platform. And we can do this now, transcending time, space, and location. Look at me providing information to you on this platform. We wouldn't have dreamt of doing this 3 years ago, but we need to include each other in our conversations, and we need to engage more and talk about what it is that are our challenges, because compliance needs commitment from all role players. So we need conversations to connect. And if we don't educate you and our members and our role players, then, you know, we won't make the right decisions for each other. So we need to rely on each other. And if that doesn't happen, the entire industry suffers. So I want to leave you there by saying that, you know, I hope to be invited again back next year, talk a little bit about something else, maybe a different piece of legislation. And what I'm going to do now is to hand over to my colleague, Brett, who's going to talk to you about the two-pot system. And it's all about how you can have early access to your retirement funds. So thank you very much.
Thank you, dear Linda. Good morning, everybody. I think we've heard a lot about the two-pot system, and when I was asked to do this presentation, I actually thought, well, I don't actually want to talk about it, but let's do it in any case. So in my discussion, I will just look at the what, the why, the how, the when, and the challenges and the way forward. So where does this come from? There was draft legislation, the Draft Revenue Laws Amendment Act was published for comment, and up to, I think, the end of August, all interested parties could give comments on that. And one of the things that this piece of proposed legislation wanted to introduce was the so-called two-pot system in regard to withdrawal benefits from retirement funds before the date of retirement. Now, if I can take you back a year, on the as from the 1st of March 2021, we had quite a big shift that happened in relation to retirement benefits being paid from a provident fund. And as you would know, is that from that date, provident fund members that were under the age of 55 on the 1st of March 2021, going forward, any new contributions that they make to the fund, they could only take 1/3 of that as a cash withdrawal benefit, and the other 2/3 must be used to buy an annuity. Okay, next slide. So why did government institute these changes? If you look back, government did a study in 2011 already called, and they brought out a policy document, and I must read it. It was called A Safer Financial Sector to Serve South Africa Better. And one of the things that they already identified in 2011 was the lack of preservation when people move from one job to another. In most cases, they will cash in their pension or provident fund benefits, take the cash withdrawal benefit, and then start with a new employer, start saving for retirement from zero. And what now happens is that if you do this and you change jobs every 5 years, it means that in actual fact, you're only going to save for 5 years before retirement, because all the other money that you saved over your lifespan, your career, was actually used and not preserved for the reason why you saved it in the first place, and that was retirement. And as you, Linda, also mentioned, we saw COVID in the last 2 years. And what was more pronounced is that households were in financial distress. And in some other countries, people were actually given access to their full retirement benefits, which was also not a good idea. So government identified these two issues and tried to address it with a two-pot system. Next slide. So what is the current situation? Currently, members do not have access to their retirement fund or retirement benefits before they leave the fund. So while you're an active member of a fund, you only have an expectation that you will get a benefit from the fund at a certain future event. For example, where you resign, where you get retrenched, or where you retire from the fund. So at those instances, you will get a certain right to a benefit. But before one of those things happen, you don't have any rights to claim from your pension fund. But at that stage, when you resign or your service is terminated or you are retrenched, you have the option to take your full retirement savings as a lump sum cash benefit. Of course, you're going to pay a lot of tax on that. Next slide. So what changes with the two-pot, and I call it the three-pot system? Members will have limited access to their retirement assets while they are still active members. So while you are a member, you can access some of the funds in your retirement fund. So you don't have to wait till you resign or your fund membership is terminated. But what also comes in is that you will only have limited access to your withdrawal benefits. So not everything that you could withdraw in the past, you will be able to withdraw as a lump sum withdrawal benefit when you terminate your membership of the fund. Next slide. So what are the three pots that we have? Firstly, we've got a vested pot, and that is all the benefits that you build up to a certain date. As an example, the date that we're going to use that is mentioned now is the 1st of March 2024. It was the 1st of March 2023, but government found out that there was not enough time to do all the changes that needed to be made on administrative systems of funds to be able to accommodate it by the 1st of March 2023. So you've got your vested pot, then you've got a retirement pot and the savings pot. So those are the two pots, or the two new pots that are being introduced. So what is the vested pot? Next slide. So the vested pot will consist of all your contributions and growth on those contributions up to, at this stage, the 29th of February 2024. So everything you have there will will stay in that pot, and you will have the same rights that you have at the moment. So everything in that pot you can take as a lump sum withdrawal benefit. So everything that's in that pot plus the growth on that, let's say if you design in 2027, then everything that's in that pot and everything, all the growth up to 2027, you will be able to take that as a lump sum cash withdrawal benefit. So the current retirement fund regime will stay. So you will pay lump sum tax according to the withdrawal tax table, which means that only the first 25,000 Rand of that amount will be tax-free, and everything above 25,000 will be taxed at a rate of between 18 and 36%. Next slide. So the two new pots is, the one is your retirement pot. So let's say from the 1st of March 2024, you contribute 300 Rand to your pension fund or provident fund. 200 Rand of the 300 Rand will go into your retirement pot, and 100 Rand will go into your savings pot. Okay. So the money in this pot, you will never be able to access before date of retirement. But government is now also considering giving limited access to the money in the retirement pot, especially in circumstances of where people are retrenched. But at the moment, they're looking at very strict requirements, as you can see there, that will be applied before you can actually have access to that money. And where the sum of the retirement pot and 2/3 of the vested pot is less than 165,000 Rand on your date of retirement, then the full benefit can be taken as a lump sum cash benefit at retirement. Next slide. So what is the savings pot? So as I said, 100 Rand of your 300 Rand contribution will go into this pot. The money in this pot will be accessible during your fund membership. So every year you get an opportunity to access that pot. At the moment, they're looking at limiting it to one withdrawal of at least 2,000 Rand from this pot per annum. There might also be a maximum limit as a percentage of the pot or an X amount. So all withdrawals while you are an active member will be taxable, but in this case, it will be taxable as per your normal income. So if you withdrew 20,000 Rand in the current tax year from your savings pot, that 20,000 Rand will be added for tax purposes to your normal income for the year. So you're not taxed on on the retirement scale or the withdrawal scale for lump sum benefits, but you are taxed here as part of your normal income. So the withdrawal that you make from the savings pot is then added to that. So funds that are in this pot at death or retirement, you can take it all out in cash as well. Okay, next slide. Okay, the next two slides, I'm just want to highlight that, as I said earlier, people that were over the age of 55 on the 1st of March 2021 and were members of provident funds, their money is still under the, let's say, the old regime, where they can still take 100% of their money in cash as at date of retirement. So what they also did here is they're going to give people who are over the age of 55 on the 1st of March 2021, in all probability, they will have the choice whether or not they want to move to the two new pots, or if they want everything to stay in the vested pot, or they can split it between having their current money in the vested pot and the new money moving to the savings and the retirement pot. Okay, next slide. Okay, on the next slide, it's just what happens with the money when it's paid out to members over the age of 55, and what are the options for those under the age of 55, who are under the age of 55 on the 1st of March. So next slide. So I'm not going to go into detail there. So the target date is 1 March 2024, with in all probability a 12-month period for all the role players to change their administrative systems to be able to cope with this. So we're looking at promulgation 1st of March and probably 1st of March 2025 that everything's got to be up and running. And next slide. So what are the challenges? I think one of the biggest challenges is the extensive development of admin systems. And I don't think it's only going to be admin systems for administrators and for pension funds, but it will also have an effect on the admin systems of asset managers, because remember, this is now 3 pots of money that you have to apply Regulation 28 to. So I don't know to what extent they have to change their systems to be able to cope with that. At the moment, we also seem to have rather significant opposition from organized labor, and especially from COSATU affiliated unions. And one of the bones of contention is the whole issue of seeding. And seeding is, COSATU wants a portion of your vested pot. You must have the option to pay a portion of that vested pot to the savings pot. And the reason for that being is that so that members of the fund can have immediate access to something. Because remember, if everything goes well and we start out on the 1st of March 2024, that retirement fund and the savings or retirement pot and the savings pot would have zero in it. So it still has to be, you still have to first put money in it before you can draw your first 2,000 Rand. And what the unions want is for especially your savings pot, some of your money to be moved from your vested pot to your savings pot to give immediate access to members to some of their retirement fund money. Okay, next slide. So what is the way forward? I think there's still going to be 1 or 2 or 3 new versions of this coming out, and there will still be further negotiations, especially in regard to seeding with your unions. And as all things, we all know that next year is an election year. So normally during an election year, you find that legislation moves very, very slowly because there seem to be other priorities. But I think that 1st of March 2024 is very ambitious, given the significant system changes that will have to take place all over the industry. Next slide. Okay, I think I'm done. Thank you. Back to you, Virgil.
Thanks so much, Brett. And thanks, Brett and Yolanda, for sharing that very important information with us. I know for our employees and our members on the call, quite a bit of a mouthful, a lot to take in. But again, we assure you we are here to support you. If you've got any questions in this regard, engage your contracted benefit consultants and your client relations managers. And we will certainly try to assist wherever you've still got questions and concerns, and just demystifying some of these very important legislative things and updates. So we've reached that point. We've got about 16 minutes left. So I'm going to be brief. I'm going to move over to some of our member benefits, and we're specifically going to look at our healthcare integration. So what does this mean? So Sanlam's vision as it relates to our corporate solution suite of products is to bring to the market an integrated healthcare and employee benefits proposition. It's clear from the market research, and that will be our annual benchmark survey, which you have probably gotten familiar with. Healthcare and self-care is as important to members as wealth care or retirement savings. So you will recall toward the end of 2021, with the pandemic, Sanlam Umbrella Solutions introduced free virtual doctor consultations. Now, these are still available for members and are being utilized by members. And this can be accessed via the Sanlam My Retirement app or the member portal. Just a reminder to everyone, it is available to Sanlam Umbrella Fund and Sanlam Unity Umbrella Fund members. What we're going to be focusing on today are our 3 new offerings in terms of this healthcare integration with employee benefits integration. So one of them being a primary healthcare offering, also known as our Sanlam Staff Care, and then gap cover and also employee assistance. Now, what the primary healthcare offering is, it's quite similar to the virtual doctor, but there are some different benefits as well. I'm not going to go too much into detail, but our providers have briefed our brokers, our benefit consultants, and our client solutions and client relations guys So if you've got any further questions beyond the session, please engage them, and I'm sure we'll be happy to come out and do a presentation to yourselves and your staff. So what the primary healthcare offers is telephonic nurse consultations for starters. And I mean, these consultations can include anything from emergency medical advice, drug and poison advice, home care remedies, baby and child support, explanation of medical terms. Perhaps you've been to the doctor, or you are undergoing treatment, but you're not quite sure what the doctor said or what this means, etc. The nurses are available to answer such questions, and even trauma and bereavement counseling. Beyond the telephonic nurse consultations, a nurse can do any can even issue a prescription up to Schedule 3, that is. However, nothing beyond Schedule 3 or any chronic medication. If need be, the nurse can also refer our members and employees to a medical clinical nurse, a pharmacy clinical nurse. And members qualify for up to 5 in-person nurse consultations. And similarly, our nurses can refer you to a doctor, and members will qualify for 3 in-person doctor consultations. And all of this at a fee of 20 Rand per member per month. Now, this is an offering to the employer, and the idea is that the employer make this available to all of their staff. So it's not an opt-in on a member level. The idea is that employers opt in and engage with us and for these and acquire these benefits for their staff at a fee of 20 Rand per member per month. It would then be a compulsory benefit for all members who will be able to use these primary healthcare facilities. Next, gap cover, and I'm sure some of us, hopefully most of us on the call, if you've got medical aid. Oh, just to mention, so the primary healthcare is over and above medical aid. So whether you have medical aid or not, you are able to use the primary healthcare facilities. So if you've got medical aid, you may have heard of gap cover, and essentially gap cover covers the difference between the prescribed minimum benefits or the medical aid rate, as we like to call it, and that of some of our specialists who charge sometimes up to 2 or 3 or 4 times. I'm not sure what the legal limit is, but we know there are specialists out there who charge above the medical aid rates. So that is essentially what gap cover is there for, and the benefit there, and this can be taken up on an individual level. What we do offer there, or what we're proposing, is preferential rates for individual members, and of course, discount for Sanlam Umbrella Fund and Sanlam Unity Umbrella Fund members. Then our Employee Assistance Program, or EAP, some of us have come to know. So in recent years, the need for an EAP has escalated, with the high levels of depression and anxiety being seen globally. Now, our aim is to equip our clients with the necessary tools to deal with these types of psychosocial stresses in the workplace. And in collaboration with ICAS, we've co-created an affordable digital EAP for Sanlam Umbrella Solutions members. What it offers is online support, as well as live and text counseling and HR reporting, amongst plenty of others. I'm not going to elaborate on the details, but again, this offering available at 15.83 Rand per member per month also would be a compulsory benefit. So once our employers sign up, all their staff will then be able to benefit from this and have to participate in this offering. And for more information, on this, again, our client solutions guys are equipped with the relevant information. And these 3 offerings, or the healthcare integration offering as a whole, becomes effective and available from April 2023. So what we are doing now is just creating awareness around the products, around the offering, and offering our benefit consultants an opportunity to engage with us, engage with the employers on the healthcare integration offerings. And hopefully by come April, you have decided to make use of these benefits for your members. Yeah, I think that's it from me on the healthcare offering. And I note we've still got a couple of minutes left, so I think we'll take some of your questions. Yolanda and Brett, maybe you want to join me on screen. Okay, so I'm looking at some of the questions. I've got one. A compliance officer has told me that I must feature each member of an umbrella fund, which is surely incorrect. So my quick off-the-cuff answer to that is no, but I'm going to rely on perhaps Linda to come in and maybe just talk a bit more about that. Do we still have Linda on the line?
Sorry, I was on mute.
There we go.
When it comes to FICA, it's about knowing your client, and we have to know our clients who are our policy holders. So let's say Pick n Pay is our client. Let's say McDonald's is our client, or some entity like that. I'm just using arbitrary examples now. So each member, we're not going to FICA each member, but rather the persons who are in control or who owns that entity, such as the beneficial owners or the directors. So if it's an individual policy, yes, we must FICA, but this we're talking about institutions and companies. So it would be correct that we do FICA our clients, but not each member for this type of work industry that we're involved in. Different story if we're dealing with individual clients. Does that answer the question? Brett, I don't know if you want to add in on that.
Yeah, and another thing, if you think of it, all the members become members via the employer. So we get all the information from the employer. They don't have a choice in the matter. They're not transacting direct with Sanlam as a company. They're transacting with the fund, or they become members of that fund. So that fund gets all that information from the employer. So we won't FICA the employer or the information we get from the employer again. So we take it at face value that the employer has certain obligations to give certain information through to the fund and to the administrator in terms of the Pension Funds Act, and we rely on that. So I don't think we're going to ever put in things in place to check that everybody's name and ID number is correct. We assume that, or we accept that if the employer is using that same name and number and ID number for tax purposes, then we can use it for the administration of the fund. Yeah. Where there might be an issue is where you've got additional contributions that the member is now paying. He won the lotto and he wants to pay 10 million into his fund. Then you've got to have a FICA process in place to see what the source of that money is. But any money that comes to us from the member actually comes through the employer's payroll. So we know what the source of the money is. We don't have to look what the source is. But if the member now comes and says, I won the lotto and I want to put 10 million rand into my fund, then we've got an obligation to FICA on that member only.
Great. Thanks so much, dear Linda and Brett, for that response. Another question, am I correct in the assumption that the employer, admin, or contact person that captures the monthly contributions, etc., will update all the required information via the Sanlam portal? So yes, you are absolutely correct. We are currently in the process of upgrading or updating, developing our systems to provide for the FSCA conduct standard updated legislative requirements. So if you are currently using what is fondly known as STEP, our straight-through electronic processing system, all the updates will take place there. And once you've updated it once with your employee information, for example, it will remain there on the screen. And only when that information changes will you be required to update it. For employees who are still making use of sort of manual Excel spreadsheets to submit their monthly data, again, I've mentioned earlier on the advantages of using the electronic contribution system. Perhaps engage your client relations manager, let them come and tell you how the system works, how we can make it work for you, what your concerns are with the system, and I'm sure we can find our way around that. I know in the past we had challenges with multiple authorizers or confidentiality. And just to mention that we've got multiple setups on our electronic contribution system. So you can have one person runs the show system where the person can change information and submit and approve the payment. You've got a financial authorizer role. We've got segregation of duties where one person updates the data and another person authorizes or approves the payment. We also understand that in some businesses, we've got a sort of multi-factor authentication or two people authorizing. We also provide for that means of transacting. So you can have two people in the approved part of the contributions to approve the payment. And then we've even got a confidential authorizer as well. So sometimes you've got a financial director who's not necessarily an HR or payroll person that also needs to authorize, but that person is not privy to the actual salaries and things like that. So we've even provided for that in our system. So please speak to your client relations managers and see how quickly we can get you onto our electronic contribution system. Next question, we've got 3 minutes left. What happens when the employee does not have an email address and sometimes no cell phone or landline?
I'll take that, Virgil. I think it's a good question. I also think it's very rare that employees will not have an address or a cell phone or landline, but it can happen. We obviously, it depends on who your employer is, because the idea here is that member must have contact. We have to have a contact number or some platform where the member can be provided with information. And sometimes if the member doesn't have those personal addresses or cell phone or landline, the employer can, for example, have an intranet or some kind of electronic platform where the information can be seen or accessed there. And in these cases as well, I mean, there is still, post offices do work as well. But I mean, obviously it becomes problematic when, let's say there's 6,000 employees and we all have to send to post addresses. It's not going to work. So we hope that we can work together with the employer to make sure that the employee and the member will have access to information. If it's not via email, cell phone or landline, maybe presentations are done, road shows where the person can be provided with information. And we certainly will go directly to the employer and hope that the employer will somehow and in some fashion provide information to employees. And sometimes that means providing information to HR or to some representative where that information can be distributed. But I mean, obviously, this is all about treating the client fairly and treating the customer fairly. So we will never hold it against someone. It's not going to be held against someone if they don't have information that they were supposed to receive, and we didn't do enough to provide it to them. So here's where we're hoping that consultants and brokers can come in on this and say, in my case, my clients, I have a number of clients, 100 clients who don't have email addresses. What can we do for them? And then we will do something specific. So like I said, again, it's all about engaging each other, talking about what is our stories, what are our challenges, and seeing how we can get around it. I hope that answers the question.
I think it does.
Sorry, Virgil, I see Stefan de Waal has his hand up.
Sorry, I can't see.
I don't think I'm not running the technical side of things, but I think that function has been disabled. So I don't think we'll be able to hear him. Stefan, how's it? Thanks for joining us on the line. If you can't type your question in the chat, Stefan, then I mean you know where to find us, and we'll actually include your question into the presentation and provide feedback. I note that it is 11 o'clock already, but I quickly I'll quickly jump on the two questions. I think the one is just a yes answer. So Yusuf, hi Yusuf, nice of you to join us as usual. Taxation of the savings pot, forgot to mention it will be based on the member's marginal rate. Brett, I think you did mention that, correct?
Yeah, no, it depends. It depends on the type of when the money is taken out. If the member is an active member and he takes it out of that savings pot, that is added to his normal tax, so that will be the marginal rate. But if he leaves the money there till age of retirement, then that money is added to any other lump sums that he gets, let's say from the vested pot. So then all that money is then taxed on the retirement scale, which will be in the first 500,000 will be tax-free.
Thanks. That makes sense, Brett. And then last question we're going to take from Johan de Kock. Thank you for your question, Johan. Very good question. So if an employer, for a variety of reasons, does not put an eligible employees on the fund, will now have to be reported. So, Johan, I would say in a case like that, please engage your I'm not sure if you're a broker or employer, but engage your contact benefit consultant or your client relations manager. We do have funds where certain people are excluded from participation, but in those cases, those people are specifically, if I can call it, written out of the rules. So, for example, under eligibility, the employer states upfront that a certain classification of members do not participate in the fund. but it cannot be, we have to be able to place the members in a single sort of, what's the word I'm looking for, segment, and say directors, for example, or senior managers or drivers of whatever reason. So speak to your client relations manager. Let us just make us fully aware of what the situation is, and who, in your opinion, should not be on the fund, or for what reasons they are not on the fund, and let's discuss it and make sure that we all are aligned to what is legislatively required. I think we're going to end it there. Again, all questions will be answered post the session, and we'll send out some form of distribution where we'll make the video also available and answer all of your questions. I want to thank my colleagues, Linda and Brett, for joining me in this morning's session. And of course, thank you to all you wonderful participants who stayed on the line. We certainly hope that you found our session today informative, and it's going to help you along this journey as we partner together to reach better retirement outcomes for our members. Thanks so much for joining us, and we'll see you the next time.
Thank you.
Goodbye.
Thank you. Bye.